Hello, I'm going to give a quick update on GBPUSD. Before you is just a plain chart of the same GBPUSD on the monthly time frame. This is a long-term analysis that we had done before, but I'm just going to repeat it. We saw that we had some liquidity taken here. We are on the monthly time frame. Remember that we some liquidity taken, filling this monthly FVG. Market rallied up. First break of structure that is called speakers on the monthly is right here. Then this lower low right here. This is where. Let me just show you here. Lipstick on the chart. You can see liquidity taken. First break of structure following this model, this bullish version, where we said we needed a sweep of liquidity. The first break of structure, then this lower low. This is where you take our entry to potentially smash these highs in the long term. But we can always take partials along this leg, liquidity lying along this leg. Yeah. But for the investors, if you can hold this trade and to potentially smash these highs, it will be for your own risk. Yeah, because anything can happen in the market. Because right here you can see we are on the premium zone. We might reverse to move against the direction that we predicted. We can see the market took this defender, reacting off of this goalkeeper, and we are now moving towards this target, this higher high. We can also see that the market is right here, and being right here, we are likely to draw on two zones. We have liquidity lying at this high right here, and we have also this monthly FVG lying here. I said FVGs act as imbalances where the market is likely to be attracted. FVGs act as magnets, and for the swing highs and the swing lows, that is where the market is likely to move quickly to smash them. So let's drop down on the lower time frame to find out where the market is likely to draw between. Is it this high or this FVG? When you drop down on the weekly, this is what we can see. This is the monthly FVG that we marked, and you can see the market is reacting off of. Let's see the market what is doing on the weekly. As rejections here, so you can see there was some liquidity taken here, and the market decided to reverse off of that. And before that, right here, right here, you can see this liquidity. This guy was taken. There's some liquidity line here that was taken. Just from experience, I know it will be hard for some of us who are coming here for the first time to understand. I recommend that you go through the previous videos so that you can grasp what I'm just trying to brush on. Liquidity was taken here, and following our bullish version of the standard trading model, we always say that we would anticipate for the first break of structure, the lower low, to take our entry, right, to potentially smash these highs. And what you can see here, after this liquidity was swept, right here, you can see the clearest first break of structure on the weekly. Remember, we are on the weekly. It's this guy around here. This inside back candle. I don't understand. But from experience, you just come to know what is going on. So I mark this guy here, and luckily, we can see that this lower low was taken. First break of structure, the lower low was taken, and the next target following this bullish version of the standard trading model is we should smash these highs. that is following our strategy. Yeah, so I am anticipating this market to this high to be taken before we might come to draw our liquidity at this FVG. That is my bias, and being a bias, I'm not 100%. Anyone can have a different bias from what I'm doing. So let's drop down on the lower time frame and see where the market is. Let's see a simplified picture of the market. This right here, we are on the daily. You can see very clearly the side on the weekly that we saved some liquidity, and on the daily we are seeing the market reacting of the goalkeeper there, a defender taken, goalkeeper reacting of the market. And after that, said after the sweep of liquidity, we should be anticipating for a sell. This is we are following the bearish version of the standard trading model. Alright, where we said we needed a sweep of liquidity, first break of structure. There's a high. This is where we take our entry to potentially smash these lower lows in the long run. But you can always take partials along this leg. So what you can see here is the market sweeping some liquidity, reacting of that goalkeeper. And the first break of structure on the daily that we can clearly see, that is very conspicuous, is this guy. First break of structure, and then its high is right here. This is where we set our sell order and our take profit above this high, considering the broker spread after the sweep of liquidity. And we ride the market, wait for our order to be triggered, and we ride the market to smash these lower lows, which was perfectly delivered. Right? That was it. This is the liquidity that I said we swept on the weekly. And there was a first break of structure. I think it was around here, this guy here, which we have just mitigated, and we will be anticipating this high to be taken. Let's drop down on the lower time frame so that we can get a good picture of what is happening here. Okay. This one is on the 4 hour time frame, and what we can see is the market doing its thing. I can see this is the trade that we rode on the daily, smash this lower lows, and what we can see along this leg here after the sweep of liquidity that I showed you on the weekly and even on the daily. You can see the clearest first break of structure on the lower time frame, because I've been insisting that we always drop down on the lower time frame just to refine our entries, so we can get the first break of structure that we get on this leg with this guy here. First break of structure on the 4 hours around here, and it's lower low right here. This is where we take our entry. This is where we're supposed to take our entry, right here. Just sell this guy to potentially smash these highs. But what we can see is that this is just an expanded version of it. But what you can see where we could have set your stop loss. This is a big risk exposure, right? If you were to take this trade, then you will be exposing yourself to a very big a risk. See, all these shoes supposed to take, the market has to linger in between this guy before he takes this lower lows for this high to be smashed, or it just come and smash this lower low immediately, this guy here, and boom, take this high. So we don't know exactly what the market can do. So what to do after this sweep of liquidity, you can try to be conservative by trying to find out another short trade along this leg here. You can see the old liquidity taken here, and of course you should be expecting a first break of structure around here to smash to these targets here. Yeah, I'm just trying to show out the logical reasoning of the model. And that's the bullish version of the standard trading model. This is exactly what it says. And we can also see another trade here where we had a sweep of liquidity. After this liquidity was taken, first break of structure around here, you see that some liquidity was taken here. And the first break of structure was around here. So you can ride this market a bit, quick one, and get out. Yeah, remember on the 4-hour time frame. So when this is a massive pips, just this move here. We also see there was some liquidity taken, so this guy could also run a bit. So it is what it is. Let's move on and see what's up. Right, dropping down again, much on the 30 minutes time frame. We are now on the minute time frame, my favorite time frame to trade on. This is what was happening there. This guy was taking a first break of structure around this place. You can see the market reacting of that guy to give you a little bit of pips. You can move around here to this place, and you're out. This is the guy that I said that should be conservative here, and we can see it rapidly flashed up. There was a first break of structure here, and you set your order, and boom, you ride the market to the targets. You get another first break of structure, lower low here, you take it, boom, another one around here, then boom to the targets, right? But once you had, if you had set here, then you could have taken a stop loss. Yeah, that's the importance of looking the market on the higher time frame. But once you go down, you go up on the higher time frame, you can see clearly. This was the first break of structure where you set your order. The stop loss below here will have brought this market to this place. You can see that there was some liquidity taken here, and the first break of structure that you can see with this guy around here. So you can see the market coming to smash it, to smashing it. See the market reacting of this liquidity. I stressed that we should always take partials at the nearest liquidity. You can see what the market is doing here. If you had not taken your profits here, and then you will be again on the negative side, right? And you don't know what the market will do next. Yeah, we are anticipating it to be bullish, but see, anything can happen. Again, we had some liquidity taken here, and what we can see is that we'll find a first break of structure along this leg. This is exactly where this market is reacting off. So there's some FVG here, right? There's some goalkeeper here. We're anticipating this market maybe to move to smash these high highs as predicted by this guy. Take these high highs and move up for those high highs that I specified on the 4-hour or on the daily time frame, weekly or monthly, right here. This is the guy that we are anticipating to smash. You can see there was a strong rejection here. So we are likely to smash these highs before we can rally down before we can continue maybe to take this guy, this first break of structure high here, and take this high. So it is like that. Yeah, thank you so much if you enjoyed this video. If you're new, you can always subscribe, comment, and so that we can get to grow together, get to learn together as part of my journaling. Yeah, it is like that. Ask for any question that you have so that I make some clarifications if you want to know more. And we can always even get to connect together if you may wish. Yeah. We can always try to share our thoughts on this trading, and we'll see where we can get to with this trading. Thank you so much, and take care, guys.